up, everybody? It's Ricky here with True Trader. It's Sunday prep time. It's a beautiful weekend. I want to get this knocked out, hit the golf course, and enjoy my life. I hope you guys are doing the same. Remember, guys, trading is a means to an end. Now, if you're not already, please subscribe to the YouTube channel and turn on the notifications. You are selling yourself short if you're not getting notified when Goose, my bro from another Joe, puts out that midweek watch. It's been fire. So don't miss those. On top of that, I hope you're finding some value in the Sunday preps as well. Now, leave some comments as well. I really appreciate the comments. I love the constructive criticism. I need to know what you guys would like to see more of or what you like to see less of, right? We need to hear some feedback. And as always, thumbs up if you like it. Thumbs down are fine with me too if you don't. But again, if you don't like something, please let us know what it is. Other than that, the other note I have is make sure this Thursday you're paying attention to the Method and Mindset with me and Kim Ann Curtin, the Wall Street coach. It's every other Thursday, so this Thursday is it. It's 5 p.m. market time on TrueTrader.net's Instagram channel. It's a live coaching session with me and Kim where we help a struggling trader and we tackle both the mental aspects and the technical aspects of trading. Also, www.methodandmindset.com. Go there. Hours and hours and hours of free content, just value packed. I can't recommend it enough. Please check that out. Now, the little tidbit I wanted to kind of like talk about real quick before we get into the actual Sunday prep is just one little concept that I use to trade names that are correlated to the market, and it helps a lot. And that is the concept of relative strength and relative weakness. Now, when we get market weakness in the SPY and the NQ and the Dow and everything's coming in, some names will stick out like a sore thumb as just not wanting to roll over. Things that just, there's a constant bid. Those are the names that have that relative strength. Maybe they're not even just holding still. Maybe they're even green in a bloody red tape, right? So that is a huge signal for you to pay attention to those names. Because if they have a bid in a red tape, what do you think is going to happen when the market finds support and we get a push? Those are the go-to names. And the same concept works on the flip side. If we're in a strong market and there's certain names that are flat or can't push or putting in lower highs or even worse, red, those are the names with the relative weakness. And those are the names you should focus on if we're in a strong market that turns. And those are the names that should get the extra downside follow through because they were already weak to begin with. Now, that concept is how I find a lot of the names for the Sunday prep. But not only is it something I use for preparing for the next day, it's something I use intraday. If I see a strong market and there's a name that's just struggling, it's something on my radar for that day. So there's very often names that are not in the Sunday prep or not in my Monday prep or not in my Tuesday prep, but I'll find them midday or in that first opening hour when the market has either a push or a flush, and those names either won't budge one way or the other. Those names become focus names. So get used to that concept, get used to how it can help you in your trading. I think it's a very powerful thing and oftentimes leads to some really headache-free trades. So if you don't understand it quite enough just from what I've given you here, head over to TrueTrader.net. We talk about it all the time. I would love to see you guys over there and participating in the community. So with that being said, it's time for the disclaimer. Here we go. Neither I nor TrueTrader or any of its affiliates are registered as security broker dealers. I am not a licensed financial advisor. Nothing I talk about today is a solicitation to buy or sell any stocks. Trading is risky, guys. You must assume those inherent risks. Make sure you guys understand everything I talk about is just for entertainment purposes. Now, prep time. So, right into our broader market analysis, starting with our ES as always. And as you can see, guys, you know what? Let's change things up a little bit. I'm gonna turn these pivots off, and we're gonna start on the monthly. Okay, let's just start on a higher time frame and work our way down. Are we extended on a monthly time frame? How do I determine that? It's usually based on, are we trending on the 20 SMA or are we far away from it? So it's pretty obvious on the monthly time frame. Yes, we are extended. Yes, there is room to come in if higher time frames start losing their trends. So next time frame down for me is the weekly. Are we extended? No. We are trending on the weekly 20. Yes, on a daily chart, you may start to think things look a little bit bearish. Are we going to go into a correction phase? Is this going to be a bear market? Remember, guys, these are the things I do to remain objective and not panic. We are still just pulling into the weekly 20 SMA on this time frame, and these time frames matter, guys. You got to understand. Just because we roll over on a daily chart, it's just a normal reset in price. So as I stated, I believe it was in the last Sunday prep, what I'd like to see is possibly some sideways action and some narrowing of the range, some contraction, right? So far, last week was it an inside week? Let me check the lows. 42.60 and 40. Yeah. So we had an inside week, and you know what would be great is maybe another inside week. Now, obviously, I don't get to choose what happens, but I do prepare for all scenarios. So if we can put in maybe a inside week or possibly a push higher, I'll look for dips to start putting in higher lows, and I'll start looking for my longs setups on strong names that are putting in bases on support. If we lose the lows, I still don't necessarily think it's time to panic. It is kind of adding to the red flags that we can't, hold certain levels. But again, in the bigger picture, the higher time frames, we're still fine. There's nothing wrong with this. Now, zooming into the daily, obviously we see, when you get into the daily chart, you see more of the nuances of what's happening under the hood, right? So obviously pops into the 20-day and the 50-day are definitely acting as resistance. You got to acknowledge it. It doesn't mean that we won't eventually break above those, but until we do, we may still find a lot of overhead supply on other names as the markets push into these levels. I'd actually like to see this we've already sort of rejected the underside of the 50-day and we're back below the 20-day as well. I'd like to see another pullback and buyers step in before we test last week's lows. I'd like to see, some of these 4300s start to hold and start to base. Obviously, if we come down and test the annual as well as last week's weekly low, those are definitely levels of support that I'll be looking for. As you can see, I have an alert set for under last week's lows, but it's also it's a pullback right into levels of support as well. This was prior resistance and turned into support, and you can see it's held. So pullbacks are still opportunities for me to look to get long on strong names. If we push back above certain levels and then start to pull back and base again, then I start to look for even more bullish setups. Now, if we were to, for whatever reason, extend straight up without really having any major issues with resistance, if we were to just pop straight up into 44.70, which is the monthly pivot, and I think it's 2 weeks ago's high, I believe, as well as maybe 3 or 4 weeks ago's little congestion area, that would be a level where I might start to look for fades on names that are extended or pushing into levels of resistance. And then right above that, you have the quarterly pivot at 44.90 as well as that psychological 4,500 level. So that's my view on the ES, the S&P. Again, I'm not panicking, guys. I really do think this is just a normal pullback and we will start to find some bases. It doesn't mean that I'm just gung-ho hitting longs on every dip. There are definitely going to be some short ideas as well. But again, there's a lot of people out there with this giant notion that the sky is getting ready to fall and that it's time to go all cash, bear market coming, and I just don't see that yet. So I'll keep you guys updated as things develop, but that's the way you got to play it. You got to play what you see, and remember that, keep your opinions that don't mean jack, hold them very loosely, because you need to be able to switch bias and change your opinion really easily in order to follow the price and not just get overly biased. I see it happen way too often where people get overly biased and they're not paying attention to what's actually happening right in front of their eyes. So that's the outlook on S&P, guys. Let's move over into the NQ. All right, guys, so here is our NQ chart, and it's obviously, just like we say every week, it's very similar to the ES. A lot of this stuff is very correlated. You'll see we did kind of, obviously we reached this level ever so briefly, and we've been holding, we've been pushing off it. We're right into the underside of the 20-day here, as well as some stacked pivots. You got the quarterly, annual, and monthly all right there, right under the 20-day, and the psychological 15,000 level. So it's no surprise at all that this is really a tough spot for us to get through, especially on the first go. Doesn't mean we won't. So what I'd like to see is pullbacks put in higher lows, and then when we push back above 15K, if we can, then I would look to see if there's follow through on some of the tech names. If we lose last week's lows, I will start to look for lower highs and possibly some short setups. And just like the S&P, if we just blast through 15K and there's no real challenge from the bears or selling from the bulls, looking at the monthly up there at 15,370 and the quarterly at 15,44, which puts us right into, I believe it was 2 weeks ago's high, or maybe it was no, it wasn't last week's. I believe that's 2 weeks ago's high. So that's the first area of resistance for me. And then this, you see this pink line, which was basically where the short rollover began from the all-time highs. A test of that would also have me interested to see if the sellers step in. So that's NQ. Moving on over to the crypto space, we got Bitcoin, and I mean, everything looks well intact. We got straight through that 53K level without any real challenge at all. And even when it did finally roll back over, what did it do? It retested that level and held. And we're still holding it. So I think the next logical area is going to be up here around 59 to 60. 60 is going to be a real psychological level. And then after that, we have all-time highs. So I think everything looks really good on the crypto space. Keep watching for when we do have major pullbacks, if we put in higher lows, or do we actually come lower on some levels. I really can't help but just always admire the way the crypto space obeys technical levels so well. And I mean, when you think about why that would be, it's pretty obvious. There's really no fundamental way to value these things. The only way to trade it is based on technicals. So one thing I do want to kind of point out about the crypto space is that we feel like, 60,000 Bitcoin, that's, I mean, at least a lot of the crypto skeptics, right, think, God, that's just a ridiculous price for this silly coin to be trading, right? When you get in that mindset, what you're doing is you're really putting yourself at a position where if this is going to 100K or even higher, you're going to get overly biased when we're pushing into the 68, 70, and you're going to think that this, is an automatic layup short and it's going to come back in, and it might not be so. What I like to do is just kind of zoom out a little bit and think about, in terms of, squash this down, pull it down here, and you can really start to see, like, if we just get rid of these numbers on the y-axis of our chart, or start to think of them in terms of a fraction of what they really are. So if you look at 60,000 and just tell yourself that's $6, going from 6 to 100 or 6 to 10, it's a big move, but it's not like unfathomable, right? Like, this is something that's definitely in the realm of possibility. And when I look at these charts and I really zoom out like this looks really bullish to me. Like, if we start breaking some levels, I see no reason why 100,000 is out of the realm of possibility. And maybe people getting overly biased and stubborn and not acknowledging that, like, that's possible is what's going to help it get there, right? So if not enough people are on that same side of the boat, oftentimes that's the path of least resistance. It's kind of the same concept of something being crowded. And I really do think this chart looks really good here. And I don't think it's something that's going to happen overnight either. Obviously, we're looking at a weekly chart here, and there's a lot of overhead still, a lot of things to get through before I think we start that move. But as the weeks progress and you see these Sunday preps, if we start getting over certain levels, you'll see me start pointing this out more and more. So that's the outlook on crypto. And again, guys, I'm only trading crypto related equities, but there's plenty of them, and that means there's plenty of opportunity. So the same way I was just saying, don't think that something can't go from 6 to 10. If Bitcoin goes from 6 to 10 or 60 to 100, what do you think is going to happen to the equities that are crypto related? Those, and a lot of them are really kind of like iffy companies, right? Like the Riots and the MARAs, the MARAs, and the CANs and the SOSs. You get people so overly biased on the short side, and they don't pay attention to the possibility of crypto actually doing this move. And we might get some really explosive moves in the equities as well. So I'm definitely keeping that kind of stuff on watch, guys. So that's the crypto look. Let's get into the broader, or not the broader, the sector analysis. Head on over to our barchart.com, stocks, sectors, and short-term matrix, and basically just pointing out a few things, guys. Energy is, again, the strongest performing sector. And if you look at what it's done in the last month, and actually what's really kind of crazy is it went from being one of the weakest sectors to being, in the last 3 months, it's had the best performance. And it's actually had a really great year-to-date performance, because close to the beginning of 2021, you know, we were down by the lows, and it's been just a pretty big move up since. And financials were the other one. Financials are strong, and the energy sector is strong. And I did want to point out a few of the ETFs. Let's check them out real quick. Energy daily. Now I wanted to point something out on here on the energy sector ETF. This move is, we're breaking out of above a level. You guys can obviously see this level on the daily chart. We're breaking above it, but in the bigger picture here, you can see this big old downtrend that we are possibly going to go and test. And it's also some previous levels of importance, right? This big pullback here held that level, and then we've had some other times where we push up into the underside of it, and that's actually, that push into the underside of this level was where the big rollover happened back in March of 2020 when the COVID stuff happened. So we're reapproaching that level, and so yes, I think energy looks great. Yes, I think energy has some more upside. But if energy slams or goes kind of like semi-parabolic up into this 61 to 62 level, let's go back to auto here, I'm going to possibly be looking to fade some of these energy, gas, oil names, right? And if you wait till we get into the actual prep, you'll see a lot of them have some pretty extended charts as well. But I also want to make sure that I don't forget that the overall move on energy and oil is looking bullish still, right? So pullbacks still also offer very good long opportunities. Don't forget, don't look at this chart and only see the possible short on a parabolic into this area. Make sure you understand that there's also the possibility maybe we have some early weakness starting this week and we pull back to maybe the 20-day. Like if we pull back to 51 to 52, which is kind of where the 20-day is, and also kind of where a retest of some levels, if we pull back to those levels, you might have some long opportunities on some of these oil names, some of these energy names. So don't only focus on the short ideas based on this ETF. Financials, again, another really strong looking chart. Higher lows, higher highs. Broke out to all-time highs again here. So pullbacks very well may offer good long opportunities. And we may get some extension on it. I mean, we just broke out. It's going to kind of depend on the market overall. But, you know, the weekly chart looks great right here. And the other one, let's see, go back to my notes real quick. What was the other ETF that we were going to look at? XLK, oh yeah, the tech sector. I did want to point out that the tech sector has had this pullback to a very, very clear trend line that's been holding really well, right? And obviously I could draw this a little better, but hopefully you guys know by now these trend lines aren't etched in stone for me, they're guidelines. So we pulled back here, we bounce. Pull back here, we bounce. Pull back here, we bounce. Pull back here, we bounce. Okay, so what I'm looking for is maybe a pullback again that makes a higher low, because obviously we ran into the underside of the 20-day right here, which, duh, just like the NQ, right? A lot of you guys hopefully see the links between everything in these ecosystems. Nothing functions in a vacuum, guys. Everything is interconnected. So looking for pullbacks to put in higher lows and possibly some strength in the tech sector if this trend line wants to hold. And we want to, again, I mean, look at how it looked back here in May, right? This May chart looked just like we did now. And back when we did this in May, you had a lot of people that were scared to get long anything, right? Like, oh my God, the market's rolling over. We're doing it again. Everybody's panicking and scared to get long names. I still think this bull trend's intact, and until it proves otherwise, we shouldn't be hesitant to look at this in a different light, and that light should be opportunity, not fear and avoidance. These need to be looked at as opportunities where you have very, very defined risk, and the risk reward is actually in your favor. Buy it when nobody wants it. Do not be chasing the strength, right? So that's the sector analysis. Those are the 3 ETFs I just kind of wanted to point out. And now we're going to get into the actual prep. As always, guys, we start with our long setups, and there's 2 types: strong stocks looking for continuation, and oversold reversion setup. So we start with our strong stocks looking for continuation. And the first name on my list is one from a few weeks ago. It's the CVS. And again, guys, CVS, this higher time frame chart, it reminds me a lot of DISH, DISH, which was in, I think, last week's or the week before's prep. And I just want to make sure that if this is going to have a big breakout and a move higher out of this, basically the handle of a cup and handle, that I want to have something on as early as possible where you can possibly lock some in as a day trade and leave a piece on if we close strong. And that was the same thoughts I had in the previous Sunday prep, and it's going to be, it's no different this week here. I'm going to turn on the pivots and zoom in a little bit, and you can see, you know, we rejected this little trend line from up here. Again, when we get back above those levels, that's when I would be looking for this breakout to get its leg up. So, you know, we've had a big pullback and we've pushed straight up for 3 days, right? And we ran smack dab into the underside of the 50-day and the 20-day. And so just like the broader market, you know, things found resistance there. What I'm looking for is for just a little bit of a stall out on this move up, possibly a pullback to this 82.90 area I've written down. 82.88 is the monthly pivot. 82.91 is a 61.8% fib retrace of this 3-day move up. Okay, so a pullback to that, and I want to be buying with probably risk right under this would have been Wednesday's lows. And you know, if it starts to work, the possibility to scale in, we have defined risk. Now, if it wants to just push, I may just end up missing this trade, or it may be later in the week. Maybe we push higher up into this 85 area and then roll over, and then I'll look for levels to buy if support shows up. But if we have that opening weakness, that's the area I want to scoop, the 82.90s. So that is CVS. Next idea is this DDOG, and I really like this name just overall. One of the things I really like about it is that it just really respects levels very well. So you have this 50-day and you have the annual pivot. They're right in that same area, 130. Let's just call it 135. And you'll notice it's held it quite a few times. It's got a good range on the name, 5-point ATR. It's a little bit thinner, right? So it trades, what's the average volume on this? 2 mil. So it does 2 mil a day. It's okay. It's not super thick, but it's definitely tradable, and I love the range on it. I love the way it obeys levels. So I'd like an early flush down into the 50-day with that annual pivot right there. Look to scoop with risk pretty much right below, I think that's Monday's low, October 4th. And, you know, if it stops me out there, I will have zero problem re-entering this on a flush down to this 131 area, which is the monthly and the quarterly. And again, another level that really showed it can hold a few times. So, you know, this level doesn't hold. It doesn't mean that we have to miss the trade if it comes lower to the next level. So that's what I'm looking for on DDOG, the D-Dog. Moving on from Snoop Double DOG, next idea is this XENE. And it's a bio, so I typically try to keep the bios out of here. These guys priced an offering, and they actually had the over allotment get fully exercised as well, which that's not a bad sign. And I'm really thinking, you know, the offering was priced at, I believe, 29, high 29s, like let's just call it 30. What I'd like to see is maybe a flush down to this 31.70 to 32 area. I think I have 32 written down. I think it's because of intraday. Let's check out the intraday real quick on it. Yeah, you can see this 32 level just has quite a bit of price history. So I'm looking at 32 to 31.70 as a possibility to buy a flush, and I'm looking for higher lows and the possibility that maybe some shorts were kind of banking on that that raise to kind of bail them out, because you can see it was a big volume day and then it kind of gave a short. So you know, it gave a good fade from 34 down to 29, but if some people overstayed thinking, you know, the raise was going to make this thing come in a lot lower, and then we started putting in higher lows, there may be some guys in there that are a bit upside down, and that's kind of just what I'm looking for. If possible, you know, grab some weakness and see if higher lows set in, because if it pushes over 33.70, you may get that squeeze that sends the shorts rushing for the exit. So that's kind of just the idea on XENE. And the next idea for the strong stocks looking for continuation is AMD. So you can see we've had a big push up. We pulled back a bit on Friday. The bigger picture here is basically this: 9-month long base from like December of last year all the way up to about August this year. When we broke out, we did it on big volume. I think it was a move a lot of people had been waiting for this thing to finally break. And you know, we put in some lower highs and we started rolling over, but that was with the market. And as much as people think this thing, it looks kind of like it's falling apart after the big push, objectively it's still held the key levels, the psychological 100, a retest of this breakout area, and we're starting to put in a nice base and push. So I'm looking for a flush to 103 area to possibly get long. I don't know if we're going to come down to 103. The reason I like it is because I kind of want to retest October 5th. I believe that was Tuesday's high day, which, you know, just from the daily chart here, you know, you get this low, a push up, a higher low, and the break of that was kind of what sent us. So I would like to see a retest of that little break spot. It might not happen because there was a bigger trigger here, which was over this 104.44 was like a more legit trigger. And actually, it still does kind of need to break over this 108.50 area to really get going. I just want to kind of get involved a little bit before then if it is going to make that move. So AMD's on watch. Again, I would like to see it come into that 103 area. If it doesn't, if it just comes back down to the 104, which is the 20-day, and starts to make higher lows, I may put some on there and just risk against the previous low so that I have defined risk and can join the trend. That's the idea on AMD. All right, and the last idea from this list, from the strong stocks looking for continuation, is this UPST. It's been a beast lately. You can see it's put in higher lows. It triggered a little bit of a long setup. I'm just looking for a retest. I want that 295 area, almost a 20-point ATR on this, guys. Make sure you understand that with something that has this kind of range, position sizing is everything. It's so key. You cannot be oversized on something that moves this much, because you're going to get chopped to death. You gotta have size on that gives it the adequate wiggle room, so that just because something flashes right through a level or whatever and reclaims doesn't take you out. You gotta have a bit more wiggle room on these kind of names. So I'm looking for 295 and possibly some higher lows setting in after a retest of that. You got the monthly pivot, and you can see this little trend line is forming. That's UPST, and the idea is it has been a strong stock, guys. So I do kind of want to get in there. I think, you know, even if we're not talking swing trade on any of these things should all offer extremely profitable day trades with the kind of range they have. You know, you can catch 4, 5, 6 points on something like this and be in and out within, you know, a half hour. It doesn't take long for these things to give you that kind of profit, and you can move on with your day. So that's it for the strong stocks looking for continuation. Moving right along, we go into our oversold reversion setups, and the first one on my list is PAGS. And boy, oh boy, this is the extreme kind of move that I really like. I believe they released earnings early, and this is kind of a reaction to that, as well as some of the stuff that's going on with Brazil's interest rates, if I'm not mistaken. So there is that backdrop to what has created the move. I still think there is a huge opportunity coming in this, and I don't know, if we flush 30 on it or not, but I'm going to have it on watch for any sort of emotional drops, and then the knee-jerk reaction, some quick bounce where you see the sellers exhaust, the buyers step in, and then I want to be buying dips with risk set against that low, and in hopes that we're going to start putting in some higher lows and get a nice move back up. At least, you know, I feel like this is going to give 3, 4, 5 points. It's a 268 ATR, but I think, you know, obviously on Friday it moved from 45 down to 36, so it had a 9-point day. It wouldn't be surprising to see this thing have a 5, 6, 7-point bounce, even if this is some kind of bigger event that's going to send this thing lower. I still think it's going to have some great opportunities on just the exhaustions. Maybe it happens around 30, maybe it happens around 27, maybe it gaps up a bit on Monday morning, and then we're just buying a flush and risking against Friday's lows. And if, you know, we lose Friday's lows and it rolls over and goes lower, we can always re-enter. But I think there's a big opportunity coming on PAGS. I just don't want to step in front of it. I want to wait for that exhaustion and some higher lows, and that's the way I'm going to trade PAGS. And the other one on this list, which is going to look really silly compared to PAGS because they're night and day differences, right? This is not extended like PAGS is, but there's plenty of room back up to the 20-day, and we are extended right down into a level that I really, really like. I've talked about this before, and that is the monthly. Oh, we got to get rid of these pivots. The monthly 20, guys. So, you know, this thing has shown the ability to trend on the monthly 20 very well. So now that we're down into it, and, you know, all these other moves that came down into the 20, the monthly 20, were never as exaggerated as this. So I believe, you know, that we're going to have a pretty good opportunity here for a reversal, at least back into this breakdown area of 125. So I'm looking for, let's bring the pivots back. I'm looking for either this thing to be kind of opening maybe flat or a slight gap up and then buy the flush risking Friday's lows, or if we're opening lower, a flush down into these 116 to 117 area, which you can see was prior lows back in February of this year. But I do think there's going to be a decent reversal here in the TMUS name. All right, guys, time for the short setups. Weak stocks looking for continuation. First name on my list is Target, which was on my list, I want to say 2 weeks ago. It's really come in since then, so, you know, the idea was right. I don't believe it gave us the setup I was looking for to get short. And I even think last week I had it on, so it was 2 weeks ago we were looking for the short. Last week was calling for the long. So we got the bounce, right? I'm looking for, now keep in mind, if you're going to trade something like Target, be well aware of this ETF, the XRT is the retail ETF, and it looks weak, right? Like this top here doesn't look like it's going to be super easy for any kind of pop to get really going, right? So any kind of push back into 93, 94, 95, you have all this resistance up here on the ETF, I believe is going to translate to some levels on the single names finding resistance as well. So there's two levels I like here. I like that 235 monthly pivot because it's right underneath the 20-day, so I would probably give it enough room that I could try a piece at each level. So 235 to 236.70-ish, kind of scale in a little bit. If it's not going to work, no problem taking it off and re-entering at a much, much higher conviction level, which is going to be up around 240. You got the stacked pivots, you got the annual, quarterly, and monthly all right there in that 240 area, as well as where it broke down from. So two different areas. I'll try the short on Target. If we pop into those levels, we'll see what it gives us. We'll see how it plays out. That's Target. Next idea on this list is MU, and MU has just been, you know, trending down the 50-day, trending down the 20-day, just maintaining this downtrend. And I'm simple as looking for a pop back into the underside of the 20-day, 72 area to get short. And again, this is another one where I have two levels, right? If it's not going to work at 72, I have no problem taking it off and reevaluating it up around the 50-day, which is going to put us in that 74 to 75 area. 75 is a psychological level as well, and it's going to be much closer to this downtrend line we've been holding. So I don't want to miss it if it's just going to pop into the 20-day and stuff and come back in. So I will try it there, and if it doesn't work, I'll take it off and put it back on if we can get up to 75. Granted, maybe neither of those hit. Maybe we lose last week's lows, which I'm actually going to set an alert down here too, because I feel like under last week's lows, and we're coming down to 65 to test the monthly 20, you can just see this is a very clear level of support that if that breaks, I don't see any reason why we don't test a little bit lower. So again, if it rolls over under last week's lows, maybe I look to join trend on pops shorting lower highs. So I guess you could say there's 3 different ways I may trade this one. Next up is KSS KOHL'S, again another retail, and it shouldn't be any surprise with the sector being that weak that a lot of these names end up on my short list. You can see flirting again with a breakdown level here, so under last week's lows, and I'm looking to join trend shorting pops. If we push back up into the underside of the 20-day in that psychological 50 level, I would be shorting a pop back into that level as well. And again, if you're going to trade this, keep a chart up of XRT so you know what the retail sector is doing. If the whole sector is strong, you may want to kind of hands off for a minute and see if the sector pushes into levels of resistance and we start getting some lower highs. If if you just get a one-off where maybe the sector's strong and this name stays heavy, maybe we're just going to get that last week's low day break and we'll get some rollover. Again, always be paying attention to relative strength and relative weakness, guys. It's not just is something relatively strong or weak in comparison to the broader market, but also to a sector. So if a sector is strong and a name's weak, and that sector pushes into resistance, like the XRT pushes into those levels we were just looking at, and this name's heavy, if that whole sector all of a sudden runs into resistance and rolls over, what do you think is going to happen to the name that was already weak? Exactly, guys. Pay attention to relative strength and relative weakness. And last on this list is the ARKK, the Cathie Woods fund ETF. It makes me smile to have this name on my list every time I have it. I guess I have a bias against her with the whole her going head to head with Burry, and not only that, but she's got billions of dollars under management and doesn't have enough people on the payroll to tell her that Workhorse is a shitty company and kind of a borderline scam, and they were buying that thing hand over fist the whole way down, right? So that kind of stuff makes me question a lot of what goes on over there. And on top of that, it's not just the Workhorse. There's a lot, she was buying DNA the other day when the hit piece came out, and yeah, it popped big, right? But it rolled back over on Friday. There's a lot of names that they own that just get spanked. Look at PLTR. Even though PLTR has a great chart with this breakout, it just sold off, and now we're back under this trend. It looks a lot weaker than it did. So these names find a lot of sellers a lot of times. So I'm looking for this thing to pop into the 20-day, and if it doesn't work there, I'll try it again at the 50-day. You got a monthly and a quarterly up there. It's as simple as that. Would be looking for this thing to give a few points if we get the entry correct. So that's ARKK. And on to our last section, guys, the overbought reversion setups. And there's 2 names, and they're both oil. Now, remember XLE, right? Let's actually turn off the pivots so that we don't have so much confusion on the screens. Guys, XLE, remember, pushes up into 62. I really think that we're going to find some at least near-term resistance. And if we get up there in a parabolic fashion, you might even throw this name on this section of the prep, right? You could have XLE be on watch for overbought reversion. Personally, I'd rather probably trade just the equities that are underlying this ETF. So COP is one of them, CONOCOPHILLIPS, and you can see this resistance up here. So 80 is a very key spot. What I would look for is that ETF to get that push that we're talking about, and this be pushing into 80 around the same time. I would definitely be looking to get short on COP if we slam up into 80. So that's COP, and then this is PXD. And so this one is you arguably already into the resistance that I'm looking for. And that 194 area is very key. You can see it's just right up into these levels of importance. Not only this trend line, but if you just draw a line straight across on the chart, you had these highs back here. There's just a lot of previous price history here. Now, if the ETF, if XLE does not get that push and instead rolls over from here, because we are technically right up into some resistance as well on the daily. We don't have to go higher here. Maybe we stall out here and roll over. If that happens, then PXD probably becomes the focus because we're already right up into that level. And so, you know, if the ETF pushes, I'll probably look at COP. If the ETF doesn't push and wants to roll over, I'll probably be focusing on PXD because we're already into those levels. That doesn't mean you couldn't trade PXD if XLE rips to those levels, right? There's definitely levels on PXD that are similar. This recent high back here, which is around, let's just call it 214, 213. If we slam up into those levels, then we'll definitely have a possible trade there as well on PXD. Again, I'm just giving you two different names with two different possible setups. So no matter what happens with the energy sector, you might have a play here. Again, remember also what we said about XLE is that even though it's getting a bit extended, there's the possibility of long setups as well. If that XLE pulls back, I believe it was 51 to 52 were the areas right around the 20-day. I probably won't be looking to buy these extended names unless they come back into some really key levels, 175 on PXD or 65-ish or so. Let's just call it 67 with this recent high here. If those names roll over and come down to those levels, but there's other energy names that are not quite as extended as COP and PXD. And if XLE rolls over to those levels, I may look to get long on some energy names just on the fact that a strong sector is kind of retracing the levels of support. But these are the ideas for the overbought reversion setups that I'll personally be watching. So that's it, guys, for the Sunday prep. I hope you guys like some of the ideas. Remember, the trick here isn't to have 100 trades or, you know, I don't know how many ideas I put out this week. It looks like a handful. Maybe there's 12 to 14 ideas. Doesn't mean I'm going to have 12 to 14 trades come Monday, Tuesday, or whatever. The trick is you get enough eyes out there where things look like they have opportunity, and then you figure out which ones of those opportunities present themselves. Not everything's going to work, but you just got to know how to set risk, manage risk, and capitalize on the opportunities, because put 14 ideas out there, there should be a few that fire off and work, and hopefully you have your eyes on them ahead of time so you can make your own plans and execute and bank, because that's always the end goal, right, guys? We got to take more money than we lose. Stay profitable, stay risk focused, guys. Capital preservation is everything, and after that we go out there and we crush it.